across Nigeria, spanning from production, aggregation, processing, storage, transportation, and market access. We see that the opportunity is enormous. However, to unlock this potential, it requires a critical ingredient, which is finance. The challenge is not simply the availability of capital, but ensuring that the agribusiness MSMEs become one bankable, investment ready, and capable of attracting the right mix of commercial development and impact finance. As we reflect on the global sustainability agenda and the commitments highlighted across during the World Environmental Day, today's discussion reminds us that sustainable agriculture is no longer an environmental necessity, but it's increasingly becoming a business and investment imperative. Today, we are privileged to have distinguished leaders and experts who are actively shaping agricultural finance and the development landscape in Nigeria. As we go into this session, I encourage you to take advantage of the frequent the question and answer box. I also encourage you to engage. Let us know where you're joining in from, your business, and just network in the chat section. Now it's my pleasure to invite our host and our welcome speaker, Dr. Olushola Obikoye, to set the context for today's discussion. Dr. Olushola, the floor is yours, sir.
Thank you very much, Ruth. Good morning, distinguished guests, esteemed panelists, development partners, representatives of government agencies, agribusiness entrepreneurs, our colleagues from the other financial services sector, ladies and gentlemen. On behalf of Sterling Bank and the Agriculture Summit Africa platform, it is my pleasure to warmly welcome you to our Q2 Thought Leadership Seminar with the theme Sustainable Agriculture, Unlocking Finance for Agribusiness MSMEs. This timely conversation aligns with the spirit of the World Environmental Day and reflects our collective commitment to building a more resilient, inclusive, and sustainable agricultural ecosystem. Agribusiness MSMEs remain the backbone of Nigeria's agricultural value chains, contributing significantly to food production, employment generation, value addition, and economic growth. Yet, despite their immense potential, access to affordable and appropriate finance remains one of the most significant barriers to their growth and sustainability. Today's webinar therefore seeks to explore practical pathways for addressing this challenge through innovation, collaboration, and strategic partnerships. At Sterling Bank, we believe firmly that sustainable agriculture is not merely an environmental imperative. It is an economic necessity. Building resilient food systems require deliberate investments in agribusiness that are adopting sustainable practices, improving productivity, creating jobs, and contributing to long-term food security. At this juncture, I would like to express our sincere appreciation to our valued partners whose collaboration continues to make platforms such as this possible. We're particularly grateful to the United Nations Environmental Programme, the Nigerian Agricultural Development Fund, NADF, and the Development Bank of Nigeria, the Bank of Industries, and others for their unwavering commitment to advancing sustainable agricultural development and expanding access to finance for agribusinesses in Nigeria. Your thought leadership, your technical expertise, and strategic interventions continue to shape a more inclusive, impactful financing ecosystem. We also acknowledge the contributions of DFIs, policymakers, regulators, agribusiness associations, private sector stakeholders, the Bank of Agriculture, amongst others, who continue to champion innovative financing models, de-risking mechanisms, capacity building initiatives, and policy reforms that enable MSMEs to thrive. Today's conversation is more than a webinar. It is a call to action. The solution required to unlock capital for agribusiness MSMEs will not come from any single institution. I am of the firm opinion that they will emerge from stronger partnerships, from shared knowledge, from coordinated investments, and a collective determination from all stakeholders to transform our agricultural sector into a globally competitive and environmentally sustainable engine of growth. So as we engage over the next few minutes, I encourage everyone to please participate actively, share insights, challenge assumptions, nobody knows it all, and contribute practical ideas that can translate into meaningful action beyond this session. Malam Abdullahi Imam, Ms. Esther Ezadi, Mr. Femi Majekodumi, and of course, our moderator, Ruth Ozibo, and every participant. I thank you very much once again for joining us, and we look forward to a rich and engaging conversation. Welcome to the webinar, and I wish us all a productive session. Thank you very much.
Thank you so much, Dr. Olushola. You've given us, your insights have provided a strong foundation for today's discussion, and you reminded us on the urgency and the opportunity before us. Thank you so much, everyone, for joining. I can see we have more people who have joined us. Please take advantage of this chat section and also the section to ask questions. As much as possible, we want it to be interactive, and we want to ensure that we leave here with solutions that we can implement to enhance our business outcomes. So ladies and gentlemen, we will now move over to our expert panel session, where we will explore practical pathways for unlocking finance for agribusiness MSME. Allow me to introduce our esteemed panelists. Mr. Femi Majekoduni, with over a decade turning agricultural finance ideas into real-world impact. He has developed financing frameworks that support value chain actors across Nigeria, from smallholder farmers to large-scale processors and exporters. Please make welcome Mr. Femi Majekoduni. Our next panelist is Mrs. Mary Esther Ezadi. She's a champion of DBN's agricultural finance agenda and a recognized voice in the development finance, blended finance, and MSME value chain financing. She has spent over 15 years making agricultural credit work for people who need it the most. Please make welcome Mrs. Mary Esther Ezadi. And our last but not the least panelist is Mr. Abdullahi Imam, who is the head of equity investment at the National Agricultural Development Fund. He has spent over 15 years designing and deploying financing frameworks that move real capital into Nigeria's agricultural sector, from blended finance structures to equity investment strategy. His work has cut across NADF and CBN, and he has touched everything from MSME development finance to national financial inclusion. And please make welcome Mr. Abdullahi Imam. Welcome to our expert panelists. Thank you all for joining us today. I don't know if you are audible. Can you hear me? If I'm audible, yes. Welcome to our panelists. So the first question we're going to be looking at, we're going to be examining the current financing landscape for the agribusiness MSMEs in Nigeria. And I'm going to be starting with you, Mr. Imam. From your experience and your work with NADF, what would you say what has been identified as the single biggest structural barrier preventing agribusiness MSMEs from accessing formal finance? Is it collateral, requirements, adequate records, perceived risk, or what exactly is it? You have the floor, sir.
Thank you, Ruth. Good morning, everybody. Good morning, my fellow panelists, and good morning, participants. Thank you for having me. I think collateral is often cited, but it is really a symptom rather than the root cause itself. I think one of the major structural barriers is the information asymmetry. From a perspective of a DFI such as the NADF, looking at collateral in isolation does not really paint the full picture. I think it's the financial institution's inability to reliably assess and quantify the risk associated with agricultural lending. The kind of not having a structured record, not having audited accounts, not having records of sourcing raw material, how it links up to the market and everything. Financiers like predictable cash flows. And with agriculture, a lot of other factors play in. So I think it's the information asymmetry. If you now add this to things like the financial records, the high perceived risk of the sector, because the sector is perceived as a high risk, low return. Return usually comes in the medium to long term. And then there are the unmitigated risks, such as climate, such as production risk. So I think there's just a gap when it comes to information, and agri SMEs do not look as attractive to financiers as much as other SMEs, either in the creative industry, in the fashion industry. But the opportunities are there, and that's why for an agency like NADF, we are a DFI, we have a mandate for on lending, but at the same time, we are an interventionist agency. So we tend to also look at those technical things that make the sectors and that make the SMEs in the sector look less bankable, such as the yield, because you tie the yield to repayment possibilities. So the NADF gives a lot of technical support to actors and smallholder farmers to bridge the gap, to help make their cash flow predictable. So largely, I would say that collateral is not the main issue, it's the information asymmetry, and is the ability of the agri SMEs to meet the requirements of the financing institutions. And finally, I think there's also one issue with the cycle for agri financing gestation and the financial products. So a lot of the times you find that these things, the mismatches happen. And a lot of, you can mention a few financial institutions that truly understand the sector, that truly weigh the risks against the opportunities and have, made a name for themselves financing agri. So I think information asymmetry is one of the major structural barriers. Thank you.
Thank you so much, Mr. Imam, for that perspective. Mr. Majakodrumi, from the perspective of a commercial lender, I would like to hear in terms of what are the major barriers to MSMEs accessing funding? And in respect to, for example, unstructured data that they have, what are you doing to ensure that despite the challenges, we're able to bridge that gap and close that lacuna?
Thank you very much, Madam Moderator. Good morning to all of our esteemed participants across Nigeria and the rest of the world. Good morning to my fellow panelists. The major barrier, as highlighted by Imam, is information asymmetry. Basically, data or record keeping. The truth is that MSMEs are generating data. They are transacting, but nobody is keeping record of those transactions and those data. I mean, if you're a food processor, you are buying raw material, values are exchanging hands. As a primary producer of an arable crop or a long-term gestation crop, you're buying inputs. That is, you are engaging an input supplier, you are engaging an organization that is helping you with tractorization. So the truth is that transactions are happening around the activities of these MSMEs. The major problem is record keeping. These MSMEs are so unstructured and informal in their operation such that they are not adequately keeping track of the record and the data they are generating. And this is what the financial institutions need to unlock finance. So the financial institutions are unable to unlock finance majorly because the data required around the MSMEs are not available for analysis for them to identify the risk, to price the risk. So I think that is the major barrier, and I align with what Imam has said. Now, let's talk about the availability of capital. Capital is available. We are aware that the Central Bank of Nigeria just concluded a highly successful recapitalization exercise for the banking sector. And a lot of banks have scaled that up. So the issue is not the availability of capital. Capital is there. The major question is that are our agro MSMEs in their current state sufficiently structured, governed, and resilient to compete favorably for the available capital? That is the real question. And in our experience in Sterling Bank, the biggest barrier is not collateral, it is lack of reliable, verifiable data and their formal integration into value chains. And what are we doing to solve this problem? Because the problem is there, we have identified it. Now, to help with data collection and recording, we have developed a digital platform called the Agro by Sterling. Agro by Sterling. The essence of the digital platform is that MSMEs, smallholder farmers, small processors, small aggregators are able to have digital identity on the digital platform. And when they transact, records are automatically taken on the platform. They buy fertilizer, it is recorded. They buy agrochemicals, it is recorded. They buy seed, it is recorded. When they harvest and they sell to an off-taker, it is recorded. That is what we are doing with Agro by Sterling to solve the issue of data recording, which is important for unlocking finance. And on the market side, when they eventually harvest and have their product, are they able to get right value for their product? And that's why we also created what we call Cebex platform, which is a digital platform for agro MSMEs to market their products profitably. Finally, what we are doing to unlock finance, of course, we have talked about how we are solving for lack of record keeping. We have talked about how we are solving for having the right market, for their product, because most of these MSMEs are undervalued, are underpriced. all right, because they are not competitive. But we are helping them with branding of their product to ensure that they get the right value for their product. But most importantly, how are we unlocking finance? Now, we have developed what we call Sterling Agro MSME Fund Program in partnership with BOI, where every MSME, regardless of where we are playing in the value chain, is it primary production, is it processing, is it distribution and logistics, every MSME is able to unlock finance at single digits of 9%. And I mean 9% all in, interest rate, insurance fee, risk sharing fee, all sum up to 9%. And you can access this funding by simply going to our Agri Summit Africa website. I'm sure the administrator will drop the link to accessing this funding on the platform in the course of this conversation. So for us, we have solved for the greatest barrier, which is data or information recording and availability through our agro platform. We have solved for access to market through the Cebex platform. We are also solving for the availability of capital through the Sterling Agro MSME Fund, which is available for all categories of MSMEs to access single-digit interest rate. Thank you, Madam Moderator.
Thank you so much for that comprehensive knowledge that has been shared. And for those asking on the chat, we will definitely, the links will be dropped for you to be able to take advantage and also sign up for what he has spoken about. And so we're going to be moving over to Mrs. Izadi. And we know that the DBN has been partnering with financial institutions. I want to confirm from your perspective, do you see improvements in how credit reaches agribusiness MSMEs? Are there still gaps that exist? Mrs. Eziadi.
Yes, thank you very much, Ruth. And thank you, my fellow panelists for the insights so far. And of course, Dr. Shola as well for the intro. I think I think I'll go this way. I think I will just start by even explaining in terms of our approach at Development Bank of Nigeria. And DBN is a wholesale licensed development finance institution set up to alleviate the financing constraints for underserved MSMEs in Nigeria. So at DBN, we have a three-pronged mandate, and it's important that I give this context. So our mandates, of course, there's the one that the most popular one, which is speaking to the access to the finance, which is the lending. There's also the technical assistance and capacity building, which speaks to more of knowledge and building expertise for both the SME and also the technical partners that we are partnering with. And there's the credit guarantee or solution, or the credit risk sharing, which we do through our subsidiary called Impact Credit Guarantee Limited. So that speaks to the risk sharing part of our mandate. So it's essentially three-pronged. And so typically when we approach any sector, as it were, as regards to MSMEs, we go with all three in terms of, so that we can ensure real results. And you will agree why this is necessary, because, you know, as a DFI, our role is really catalytic. You know, if you combine I always joke and say, if you combine the balance sheet of all the DFIs in the country together, and you combine even half of the commercial banks, we know that the banks are bigger by way of the muzzle. So the catalytic role is also to ensure what the catalyst does, essentially to trigger the results you want, so that everybody who then has the muscle can jump on it and then, you know, scale it. So, I mean, at DBN, agriculture or agri financing is one of our strategic focus area in line with our overall heartbeat strategy. There's an A there which stands solidly for agriculture. So we're very deliberate in terms of capital deployment. Again, like I mentioned, we're wholesale, meaning that we typically must partner with financial intermediaries, and most of them licensed and regulated by the CBN, as our regulation would allow us to to operate. So we deliberately deploy capital in this to develop resources in this sector, and and one of such example, which probably I might talk about in details later, is through the LPRES initiative. That's the Livestock Productivity and Resilience Support Program, which is essentially an initiative of the World Bank in partnership with the Federal Ministry of Livestock, and also with the Development Bank of Nigeria, and so it's a whole scheme. But like I said, and through that program, we've channeled funding to. So I want you to make this deduction based off your questions. We've channeled funding through our PFIs to players within the livestock value chain. And, there's like a goal or mandate to kind of demystify even that area of agriculture. And I mean, easily, I'd say in excess of maybe about 40 billion thereabouts has been channeled through that. And they've been done through PFIs largely. I mean, not entirely, but mostly through PFIs. So I think it will be a discredit to say that the banks or the PFIs, as it were, are not actively funding this sector. And there is some funding going, but vis-a-vis the gap that exists, this is probably a drop in the ocean. But I mean, we must do what we are doing, and then to align with what my co-panelist had said earlier. All of this information asymmetry by way of and even perceived risk in this sector, we need to be able to will I say show that, or will I prove the concept, so that others can come along. And by deploying things like TA, the technical assistance, growing the expertise, creating just like the beautiful job that Sterling Bank has done or has enumerated earlier, then you see that it becomes easier for funders to come in once those things are demystified. So whilst funding is important, access to finance alone does not solve the problem. There's a capacity constraints across borrowers and lenders, because when I have money and I perceive risk, I'll go somewhere else. And when you have the structure, you're doing the business, and you're not doing all the right things to become attractive to those who have the funding, then there will always be a mismatch, which is essentially what everybody has been saying around the information asymmetry. So DBN focuses a lot on technical assistance. We've done a lot, especially in this area, and we'll continue to do that. And technical assistance is directly to our partners, our PFIs. So we're stimulating both the demand and the supply side. Whilst we have some liquidity, we're stimulating by way of technical assistance the FI side, and also the capacity building directly to the demand side, which is the MSMEs, those who will then uptake, so that it's more like a market development strategy. So I would say that PFIs have continued to play a critical role, Sterling Bank being one of them. I'm sure that we've channeled some agri credits already, and a critical role in channeling this funding to agribusiness. But agri remains, I will be lying if I say that the perceived risk, there's that air of a very high perceived risk in that area. There's the information gaps, like has been rightly said, and there's limited expertise really in the sector, which is what we are keen on developing. So we're seeing that there's increased opportunity to lend, especially through value chain structures, and instead of just focusing only on the PFI, which is also why DBN has again, I might talk about this later, has an aggregator financing scheme, which we have started very recently, to kind of use a direct lending window whereby we're exploring opportunities to finance aggregators or people who essentially have some layer of impact on other smaller holder farmers, and just to kind of ensure that the impact trickles down. So those are some of the initiatives, and with the goal to reach the last mile, essentially. So for us, the conversation is not just about providing capital, like has been said. It's about creating the pathway, allowing that capital plus knowledge and risk mitigation, bringing all of our ammunition to the fore to reach the entire agricultural value chain. Thank you.
Thank you so much. I love the perspective and the three-pronged approach that you have mentioned. I would like you to zoom in a little bit on LPRES. I know, like you said, you're partnering with Sterling Bank on that. I'd like you to zoom in a little in case some people on the call want to also take advantage of that particular offering.
Yes. So with the LPRES specifically, it's a fund that, I mean, there's so many areas. It's a whole big project for the country, as it were. So there's the whole national office for LPRES and all of that, coordinating across states. I think as at last check, there are about 20 states listed and counting. But in terms of even the funding that we provide, it's not limited to your location or your state or anything. But essentially, if we're able to establish businesses within the livestock value chain. So, I mean, everything from the those pasturing, ranching to dairy to poultry to um yeah, to other things we need to feed and further, of course, which is literally we know is 80% of that entire space. So if you're adding value in one way or the other through that value chain, then automatically you're eligible. We're partner. It's an open, I mean, for all the banks that we have lines of credits with. If you check our website, you see the list of our PFIs. We essentially have this lines available. So the goal is to again lend for them to unlend. So which this fund, the unique thing about this one is that it comes at a concessionary rate. So it comes relatively concessionary, because if you look at the operating environment today, if you go to a bank to ask for a loan, we know what they will call for you. Somewhere above 30 and thereabout. So for this particular one, we're trying to see that, if the fund gets to the FIs at maybe somewhere around 9 or thereabout, then they're able to give it to the final beneficiary somewhere around 16 thereabouts. So it's still a lot. I mean, it's a better line of credit than some of the other lines of credit. But like I always give this disclaimer, that line is not enough to solve all the problems. So whether you like it or not, the business in itself must be sustainable. At DBN, what we preach is sustainable financing. So yes, so and the good thing about it is that for this, like I said, we bundle. So for the FI, they can also leverage some risk mitigation tools. Our subsidiary, ICG, or Impact Credit Guarantee Limited, they are able to guarantee these loans as well. And in terms of the guarantee fees and pricing, it's a lot, is also subsidized. And even for female-owned, female-led businesses, is even further subsidized. So there's that whole proposition around the LPS in terms of the funding. But I mean, it's a whole bigger program that the ministry and the federal government is running in terms of developing the value chain for livestock and making it viable. Because the goal of it is, as a country, is that it's trying to create some kind of social cohesion between the whole farmer header crisis and things like that.
Thank you so much. I believe that the participants are getting so much value. And again, if you want to plug into any of these solutions being offered, we're going to be sharing some links, indicate interest on your link, your feedback form, and we will definitely reach out to you. And there's something you said, you talked about sustainable agriculture, right? And there's a growing recognition that sustainability and finance are becoming increasingly interconnected. And I'm going to be asking Mr. Imam, green finance continues to gain momentum globally. And we see that adoption rates are limited among agricultural MSMEs in Nigeria. What do you think are the major barriers to scaling green finance within the sector? Mr. Imam.
Thank you, Ruth, and thank you, Mrs. Mariesta, for the explanation. Like you rightly said, sustainable agricultural practices really increase the bankability of agri-SMEs, because when you talk about sustainability issues, you now delve into issues such as climate change, the unpredictable way in which the raining season has become, some seasonal disease outbreaks, and even yield risks. So, and truly, there are measures that farmers can adopt to mitigate some of these practices, and this dovetails into giving the banks some kind of comfort, because for any potential agri SMEs that takes into account the issue of sustainability in their planning. It reduces the risk of that agri SME to either production risk, climate risk, and these are issues around. For us in NADF, like I mentioned earlier, apart from the on-lending that we do a lot of grants on the directive of the federal ministry. Like currently, we're currently, impacting members of AFAN, about 136,000 of them, with quality NPK and urea. But before we even got into the Farm Input Support Program, which is taking place in 26 states of the Federation at the moment, the NADF launched what, along with the Farm Input Support Service, launched what we call the Uniform Fertilizer Application Manual. And this has to do with sustainability, because you tend to find out that apart from the financing, which we always talk about, and the ability of SMEs to in the space to attract funding, the knowledge and the experience in maximizing that yield, which now forms the basis for repayments, or even meeting up with offtake agreements, because we have also tried to encourage the aggregator, the processor-led kind of financing, but you tend to find out that those offtake agreements are not watertight, basically because the smallholder farmers most of the time don't meet up the yield targets. So, and the Uniform Fertilizer Manual, is just the starting point. NADF is planning to do a soil intelligence intervention, trying to set up agricultural reference laboratories to get the soil, the soil component of the different across all the 6 geopolitical zones, so that to also engender quality control in the fertilizer blending, and also eventually lead us to soil-specific fertilizer application. You tend to find out that a lot of our farmers even replant seeds, and replant grains rather than seeds. And a lot of the fertilizers that they use are not really applicable to the ecological area where they are. So, and the timing of the application, the quantity of the application. So at the end of the day, by the time you now bring genetics and nutrition, which are the seeds and the fertilizer for a crop, as long as the farmer doesn't understand why you are even doing this in the first place. And just for us to tie in all of this, NADF is also training about 2,000 digital extension workers, and we are equipping them with a satellite platform for monitoring, fertilizer application, where even farmers can map their own farm on that digital platform. And then you can even monitor the application itself, the timing of the application, because these are the last mile kind of activities that ensure that that farmer meets his or her yield targets. So I think sustainability and finance cannot be separated at this point, because as long as, particularly in the agri sector, where majority of our farmers rely on rain-fed agriculture, and the way the climate change has downed on us all, we have to really tie in sustainability in everything that we do, particularly when it comes to agronomical practices, going into soil intelligence, using of hybrid drought-resistant seeds, and also the right fertilizer, and then also applying the right amount at the right time. So I think a combination of this and then having the digital extension that would, break down these complex things to the local farmers or to monitor them as the farming season is going on. So at NADF, on our own technical assistance and grant side, we have had to, in 2024, when the prices of fertilizer skyrocketed and then the influx of imported grains, dampened the mood of producers. The NADF partnered with about 41 agro processors, and we gave them subsidized fertilizers, seeds, and agrochemicals. And with those agro processors targeted a total of about 52,000 farmers to work with across the rice, maize, soybeans, and I think it's sorghum. So, and what we saw was that a lot of the farmers still struggled, because of the timing, and the offtake for the agro processors was not still watertight because most of the smallholder farmers were not able to meet the minimum yield that was stated in the offtake agreement. So, and then we realized that a lot of work needs to go into, the last mile, and also soil intelligence, and also fertilizer quality control, and extension services. So I think this is what we are doing currently at the NADF.
Thank you so much for that rich expose in terms of the training being going, technical assistance, and all that work we've done to ensure that the yield of our smallholder farmers increase and we can scale in production. I'll be going back to Ms. Ezeade, and from your perspective at DBN, what is the relationship you're seeing between sustainable farming practices and MSME bankability? And what has happened in time past? What are you seeing in your numbers? And how can it be applied even to those on the call today?
Yeah, and thank you once again. I think I'll just piggyback on some of the things that the last my co-panelist said earlier around on sustainability. I think the term is it climate smart agriculture. I think that it's no longer, it's no more a lingo, so to speak, because those who have adopted or are adopting it are beginning to see the results, because there's already like a distinguisher, like it automatically, even if you're going to have a conversation with players within the space, there's already, when you have those practices already, there's, apart from the result to yourself, I'm saying even to outlook to a funder now, there's already like a persona, so to speak, that it gives you. And like Mr. Abdullah was saying, yes, climate risk is not we are all experiencing it now. Like it's no more just a fairy tale, and it has become also it has morphed into a credit risk as well, because climate and environmental factors can affect your output, your yield, and all of that. So it's a reality essentially, and of course it's recommended that every business, as much as possible, adopts a climate smart practices generally, and to become more resilient and to position to withstand any environmental shocks essentially. So at DBN, we also have continued to prioritize in terms of consideration. So we always say that we're a bank for MSMEs, irrespective of who you are, whatever scale you are, whether you're micro, nano, small, whatever, medium. However, if you're going to I mean, this is a niche conversation now. You're going to a sector, you're going to leverage, you want to even start or pilot by engaging people who have tested such models and has seen the results. So I say this because, I mean, with our PFI, and again, I'm not just because I'm on the Sterling Bank platform, but honestly, we've done a lot with Sterling Bank across many sectors, agriculture, renewable energy, and the likes. And we know that impact is at the heart of what you do at Sterling Bank. So we've been able to really leverage our partnership in terms of leverage partnership with Sterling Bank by providing liquidity to reach players within some of these areas. So I would say that in the same vein, even for the new window that we have, even or we're creating, we're prioritizing, and I use the word prioritizing, not excluding, but prioritizing and considering businesses that are implementing some of this climate smart technology. Because think about it. I mean, I don't have the permission to mention the one of our pilot names because I haven't spoken to the client, but I'll just give an example of the transaction. And there's somebody we're funding somewhere in the north. And this player is very innovative. Not only have they adopted very good climate smart agricultural processes, they've also done a lot of digitalization, which is similar to what Mr. Femi was saying earlier in terms of, because once you have those structures in place, I mean, I'm not saying it's cheap to set up, but once those things are there, scaling becomes very easy. And why that particular player was of interest to us was not because of what they were doing, because like I said, they found the fund, they put those structures in place, but because of their ability to reach the last mile. So we're able to provide funding to them, and they're able to provide funding. So they were not what they were doing or what they are doing inadvertently is to kind of drive some kind of financial inclusion, because they are farmers, they are people that maybe not literate, maybe literate, have farmland, don't even have farmland. They are young, they can work. So they have a way of providing those kind of people, like using an aggregator model, providing them inputs, providing them expertise, literally step-by-step template. This is what to do. This is the how to monitor. This is what to expect, and all of that. When your yield comes, I am guaranteeing you access to markets because I will offtake from you 100%. So full circle, you have no loss. And then you have thousands of young farmers getting on this platform and being able to enjoy such a. So, I mean, to me, that this story I've just told is a very impactful, interesting story. So, such a funder positioned, I mean, as a funder, those would be my typical type of priority in consideration. So, not to repeat all what has been said earlier, but it's important that at any scale, really, whatever smart practices you can involve, whether it's water use efficiency, whether it's renewable energy adoption. I know that having a solar farm or whatever is it's not cheap, but I mean, those are some of the things, those are some of the ways to kind of even guarantee your yield somewhat. That way you're sure you have some expectation of what to do. So it's not a case of the drought met us or this one shock met us externally and because of that we can't farm anymore. I mean, there are things that will continue to happen. I'm not going to lie. Someone was saying earlier in chat that agribusiness is easier on webinar than in real life, but she's true, because I mean I understand where they're coming from, but at the end of the day, these things actually do work. You want to not only you want to make sure you have money, but you find out that you have the money, you plant. We know what happened to prices of commodity last year. People who had the means were storing. They refused to sell because the prices went so low. And some people who after harvesting didn't have uptake and had to sell. In fact, farmers were discouraged to go back to farm. But woe betide those who haven't farmed, because now when the next harvest cycle comes, I don't know what you're going to be doing. But my point remains that those kind of things, see that structure that person has been able to do in terms of providing the inputs, providing the expertise, and guaranteeing your offtake. Even if it means he's going to take it and store it and then find those corporates or those entities where they can channel it to, that in itself has already added value to the process. So I think I'll just say that at DBN, in terms of the window that we are now using for this, is not, and that's why I started by defining what we do and the licensing that we have, so that you understand that we don't regulate ourselves, we're regulated by the CBN, and this is the licensing they've given us to partner with financial intermediaries that are licensed and regulated, banks like Sterling Bank, to channel funding. So if you want help, you have to go to Sterling Bank, you can't come to DBN. So for example, the same way, when we have these windows, this is the best way we can approach. But we've been able to engage to get a window for some kind of direct lending, where we can now begin to look at some of these other entities, like these aggregators, these cooperatives, even if it's just a tiny window or earmark some level of funding, that we can begin to look at them, because they do have a lot of impact on the downline, on the and that entire captive area. I think I just want to mention here, just because we're having a conversation on sustainability, and it's also in readiness for the future. Just to mention that DBN also is currently the only direct access entity in Nigeria for the Green Climate Fund, as GCF. So what that means is that for any GCF application that will go to any application that can go to the GCF, DBN is essentially the only access entity. Of course, we're working with the government, we're working with the NCCC, and we're collaborating with everybody because it's a win for Nigeria. So I think why I'm mentioning this is that whilst this, in terms of the approval and the credit process, may not have fully launched, we are currently in the readiness phase. But it's important to note, because when you are doing, when it comes to, this is green we're talking about, but because you are adopting climate smart agriculture, when this opportunity comes, you then become eligible. So again, just to buttress the need to
Thank you.
to ensure that you have that.
Thank you so much. A lot of things are being said. I hope we're digesting. Again, for those who are asking on the chat, we will share with you a replay of our session. I encourage you to still participate. We see your questions coming in, and we'll start taking some of the questions shortly. There was some emphasis on the climate smart agriculture. For Q1, we did have a webinar that you can go to our YouTube page and replay, and just look at it and get a replay and assess these benefits and take advantage of the opportunities available in this sector. So a lot has been said about sustainability, and so we're moving on now to innovative financing models and instruments. So the idea here is, okay, for Mr. Majek, this question, let's explore solutions. We want to hear more on solutions. We've been able to set the tone, what is required. What are the blended finance? Why is blended finance important as a solution for the agricultural financing? And what does a successfully blended finance structure look like in practice, particularly when we look at agribusiness MSMEs? Mr. Femi.
Thank you very much, Madam Moderator. What does an effective blended finance structure look like in practice? For us, an effective blended finance structure combines basically 4 elements. Number one, affordable capital. Is a capital affordable? Number 2 element is risk-sharing mechanisms. Are the counterparties have a skin in the game? Risk-sharing is very important as a second element. The third element is also technical assistance. Because at the end of the day, agribusiness is first of all a science before it's a business. If we do not understand the science, it's only a matter of time for the business to fail. Some of these MSMEs need technical assistance on how to plant, when to plant, what markets to serve, very important. The fourth element of a successful blended finance structure is a robust monitoring tool. So for us, with all these 4 elements, affordable capital, risk-sharing mechanisms, technical assistance, and robust monitoring, you have a perfect, blended finance structure in place. At Sterling Bank, our agribusiness support facility integrates multiple concessional funding. It includes our partnership with the National Agricultural Development Fund, our partnership with Dutch Fund for Climate and Development Finance, and the DBN, the Development Bank of Nigeria, for the LPRES program, the Livestock Productivity and Resilience Support Program. So these are the 3 windows we have put together in our agribusiness support facility for MSMEs and all players within the sector, to benefit. And each funding source addresses specific need. The National Agricultural Development Fund supports broad agribusiness development. The Dutch Fund for Climate and Development focuses on climate smart agriculture for businesses that want to adopt solar energy in their farming operation, or that want to invest in solar-driven irrigation system, So they are available. The outpress essentially talks of livestock, and we have the funding, and we are unlocking this funding to practitioners in the sector. So essentially, the objective of this webinar, aware of what is available. All right, a lot of people think it.
Okay, so I think currently we're experiencing a little bit of technical glitch from Mr. Femi. He will come back to us. While that is ongoing, I will go to Mr. Imam. What is NADFON doing to help guarantee facilities, and what risk-sharing mechanisms are helping to de-risk lending and attract private sector participation? Mr.
Okay,
Imam.
thank you, Ruth. Thank you, Femi, for setting the context. So at NADF, like I mentioned earlier, the NADF has an on-lending mandate similar to that of the DBN. We engage in wholesale lending through participating financial institutions. And we have two windows. One is the National Agricultural Development Program, the NADP, which is a fully funded intervention. And then there's the NADF Blended Financing Facility, where a PFI that has already conducted due diligence on a potential borrower writes the NADF to provide part of, sometimes in some cases, 50% or 40-60. And the blended finance is very similar to the fully funded, as the NADF being a first loss agency, which is a very important component of blended financing. There has to be that catalytic first loss. So NADF releases the funds at 5.25 to our participating financial institutions. And the PFIs have a maximum spread of 12.25. So the maximum lending rate under our on-lending programs is 17.5. And this pricing was reached based on the MPR. It was MPR when the MPR was 27.5. So it was MPR less 10 basis point. And at the time, we knew, we were well aware that the cost of borrowing across the financial landscape was in the 31, 35, 36, particularly for the sector. And currently, we have about 16 PFIs that have signed up, including Sterling Bank. And we have 2 microfinance institutions, and then 1 DFI, being the Bank of Agriculture. So NADF does the on-lending and the blended finance, where the commercial bank is allowed to blend with its own commercially priced funds, while the NADF fund goes at 5.25 to bring the total average pricing for the end user to between 17 and 20. And then NADF also engages in direct lending, as our act allows us to lend to either aggregators or large corporates. So if we have a borrower who is particularly engaged in primary production, who works with quite a number of smallholder farmers and has a structured offtake arrangement with smallholder farmers, and an aggregator or processor who goes backwards to also, support with the last mile, with extension services, with training for the farmers, with introduction of simple mechanization techniques, and particularly climate smart practices, such as the use of solar pumping machines. You find out that some of this big time aggregators or processors who work hand in hand with smallholder farmers do take it upon themselves to prepare the farmers, by being very deliberate about the choice of the seeds that they want. It has to be a hybrid, drought-resistant seed, and they'll make sure that the farmers also have a solar pumping machine in case there are instances where there's early cessation of rain, and the offtake agreements are a bit watertight and they are negotiable. And then they also allow some of the farmers to make up for that offtake, in subsequent seasons, maybe in the upcoming dry season, as farmers who adopt such climate smart practices that have solar pumping machines, particularly if you are situated close to a floodplain or any independent water source. So it gives the farmer the ability to meet his offtake agreement in subsequent seasons. So at NADF, we do both three. We have not launched our credit guarantee products yet. However, we engage in the fully funded on lending at 5.25, which we have in the last year and a half. We have a portfolio of about 17 billion, cutting across rice, maize, oil palm, poultry, feed, and maize seed production. And most this fundings that we have done, I think we've done it through about 9 PFIs, and they cut across the different ends of the value chain. Some of them are like due to the collapse in depressed prices of commodities, some people who normally produce chose not to produce because there is excess grains in the agricultural space. So they would rather, get working capital facilities, stockpile, and continue production. And those are people who we know produce season in, season out. Some of them, we support them with the subsidized fertilizers for their own smallholder farmers, just so that we don't have a lot of smallholder farmers exiting the space. Because to be frank, the last 2 years has been a little bit bumpy and not too encouraging for a lot of people who have, come into agriculture as their main occupation. So the NADF has done the subsidy with the agro processors and is currently doing an all-out intervention now with the supply of high-quality fertilizers in 26 states through the All Farmers Association, just to ensure that we sustain the primary production in country. Yeah, thank you.
Thank you so much for that perspective and the insights and what's been done, to ensure that our farmers, yes, last year and a bit of recent times have been a bit turbulent, but we see that these interventions that are available, funding available, will go a long way in enabling that with climate smart agricultural practices being embedded into the system, we can increase our yield, we can scale, and we can reach food sovereignty. That's the goal. Thank you so much. We had a bit of technical issues with Mr. Femi, but I believe you're back now. I'd like you to complete your thoughts around on the blended finance framework and how it looks like in practice.
Thank you very much. Sorry for the break in transmission. I was saying that for us, an effective blended finance structure will combine 4 elements. Affordable capital is critical. Risk-sharing mechanism, very important. Technical assistance is important. And robust monitoring is also very important for a very effective blended finance structure. And I was also highlighting our major products when it comes to agribusiness support for all players within the value chain. I highlighted our partnership with the National Agricultural Development Fund, the Dutch Fund for Climate, and the Development Bank of Nigeria for the LPRES. All these are funding sources that are available. They are available under the partnership, and they are discounted interest rates. Some of the interest rates range from 9% to 10%, some are 15%, depending on what funding sources you are taking advantage of. And I like to note at this point that essentially pricing or interest rates is an assessment of risk, all right? The interest rate you get is essentially how we price the risk we are taking on you. And the fact that we are charging 9% suggests that the risk on these businesses are minimal, compared to what a bank would charge you generally, 30%, 35%, because that's the risk level the enterprise has displayed. So because of the enablers that we have put around our financing structure, you have issue with data, we fix data for you. You have issue with market, we fix market for you. You have issue with assessing quality, input. We fix that for you. So our ability to fix all of the major challenges that elevate risk level is why we are pricing at 9%, at 15%, depending on whether you are taking advantage of our fund through the DBN or through the NADF fund. All of these are available, and these are successful structures, blended financing structures. The major barriers that we have identified basically is because people are not aware that these funds exist, and that's why we are doing this. Apart from the barrier of non-awareness, we also have the high cost of deployment. For example, if you want to change your poultry farm, your commercial poultry farm into a solar-powered commercial poultry farm, the initial capital outlay is a lot, and so a lot of people get scared and they move away. They see the benefit, but then the cost of funding becomes very high. But with these blended finance solutions, it allows for affordable interest rate or pricing. It also allows for long-term, gestation period or repayment period for you to be able to take advantage of the opportunities. Those are the thoughts I was sharing before the network glitch. Thank you for the opportunity.
Thank you so much for that four-pillared framework that you have shared, and the conversation around how the 9%, we need to take advantage of the different funding available to scale, the systems that have been put in place to enable the agribusiness SMEs, MSMEs. We need to take advantage of it. We need to take advantage of it. Now, we've talked a lot about financing. We've talked about the barriers to financing. But we also understand that financing alone cannot solve the challenges that we have. We need the broader ecosystem matters. And I'd like to hear from Mrs. Elizadi. What role does policy and regulation play in expanding access to finance without creating additional burdens for lenders?
Okay, thank you. I think I'll just be very brief on this. And I think one of the things I kept saying over and over again is that even we ourselves were regulated entities. So there's limitations to how we can play or what we can do. But I think two things I'll just say on this is one is that it's evident that there's a need for continued collaboration. I mean, I've seen how the collaboration with, even for all of us on this panel, it's already a pathway to an excellent collaboration story. If we can come together as institutions uniquely together and co-create something that would even, we can even derive more results from. So what I'll just say is that our ability to achieve our mandates irrespectively is dependent, of course, on the regulatory environment and the policymakers. So there's a need to have some ongoing, partnership or engagement. And in our case at DBN, we have seen this yield success. In fact, one of the most recent successes is something I spoke about earlier around the introduction of the DBN direct lending window. That was not a window that existed all through since our startup. This is something that we started last year, and is a fallout from regulatory engagement to then say, oh, we are wholesale licensed, yes, we're regulated, However, we're applying for like a special window that will enable us consider some other kinds of players. Because if you're looking at agriculture, for example, you cannot rule out aggregators. All the schemes, whether it's agro, there's so many schemes that you can't rule out. So if you rule out those people, you may never get to the last mile. So those are some of the wins. I mean, that's one of the wins I'd say in terms of even being able to break that barrier by partnering with the regulators to even create such a window that enables us to now look at, okay, the captive market, the aggregators, the digital lenders in that space, and other people with any other innovative structures. I mean, the only thing that we cannot do as of today is begin to look at individual MSMEs, but then if they are scaled or aggregated or in an organized registered form, I mean, it's something that we can even consider and look at. And I think that has come from a lot from the collaboration around policy with the policymaker. I think in terms of advocacy, which is one of our pillars at DBN as well, we continue to advocate for MSMEs, and like I mentioned, one of such partnership is, I mean, we recently did something, maybe not in agri, but we did something in collaboration with the BOI and the CBN to kind of relaunch and reestablish the Wi-Fi code in terms of how we're even defining gender-based or women-owned businesses and all of that. And the reason why it's important, like I said, it always starts from definition, data, then applying solutions, so that when solutions come, because we will see that there'll be products that will be tailored, like I mentioned, for even our loan Greek products, risk sharing products. When there's a gender lens or a gender layer to it, it's even further discounted. So yeah, those are some of the areas that I believe that policy or frameworks are shaping our engagement. But I think the other point the last other point I'll make is there's need for continued collaboration and partnership. I'm very grateful for a session like this, honestly, because I believe that there's some level of awareness that has been created here today, just by virtue of all of this collaboration that we've had. And also to just say that, I mean, I know that it's been said repeatedly, for us at DBN, I think three things that matter to us, or some of the things that we're trying to do, especially in the area of ensuring that we have the right solution. I mentioned it before, but just to kind of reiterate, from the TA to the capacity building to technical assistance, and even some of the pricing initiatives that we have put in place, we're looking beyond even just us, our subsidiary, our partners. Recently, we partnered with the NCGC, National Credit Guarantee Company Limited, and we've also partnered with RTD as well for credit guarantees and credit insurance instruments, again, to leverage it so that whole perceived risk that everybody has we can find a way to demystify it. And restrictions as to how we would work on how we can work is something that is guided by the regulatory environment. So I'll just summarize by saying that for us, the future of agribusiness or financing will be built on partnership. DFIs, commercial banks, every regulators, sector-focused institutions, we all need to come together, both the demand and the supply side, so that we can develop the markets. Thank you.
Thank you so much for your submission. I would hear from Mr. Imam. Do you think that institutions are coordinating today effectively? And where are the opportunities for stronger collaboration? Also looking at it from the regulatory standpoint too. Mr. Imam.
Thank you, Ruth. I think there's a lot of collaboration going on within the space today, and you'll find a lot of there's a whole lot of awareness around key issues in the sector, particularly when it comes to climate change and use of climate smart agriculture. You now have agencies such as NASENI, such as REA, coming to partner with sister agencies like NADF, who are sector specific, to drive penetration of climate smart, or to increase the use of making solar water pumps readily available or available at an affordable prices and all of that. There's also a lot of coordination with the Nigerian Seed Council, and at NADF, one of our mandates is to work with the Agric Research Institute And I'm happy to state that the NADF has been working closely with 6 agri research institutes across the 6 geopolitical zones, trying to see some of their research works that have not, been commercialized. These research institutes have a lot of research work that can help farmers mitigate some of the challenges that they are facing every day. Some of them have innovated hybrid seedlings, some of them even organic fertilizers that work even better than the premium fertilizers that are being used today. So the NADF is working closely with Agri Research Institute. We have done a comprehensive needs assessment of all the Agri Research Institutes to see their current state, what they need, and also ways of making their research work commercially viable using by investing in some of those research works. And we are working very closely with the Nigerian Agricultural Seed Council as well as the Farm Input Support Services, which is responsible for regulating fertilizer use. Like I mentioned earlier, the 3 agencies came together to develop the Uniform Fertilizer Application Manual. This I think it's currently being translated into different local languages with audio recordings so that farmers understand the kind of fertilizers that they require based on their geographical location, how they should apply, what quantity they should apply. These are all things that, at the end of the day, impact the soil, because excessive use of fertilizer and chemicals also affect the soil as well as the produce itself. So there's a lot of handshake. We work very closely with the Bank of Agriculture as well, being that they are the retail end of the agri lending, while we are the wholesale, playing the more catalytic role by taking first loss or bringing in concessionary funding and supporting lending to the sector through the Bank of Agriculture outlets across the country. The NADF is also working very closely with NISAL Microfinance Bank of the Bankers Committee and NISAL PLC, which provides technical assistance and credit guarantee for agri lending. We are working on a few initiatives around small ruminants and using NISAL guarantee. And we are also engaging the central bank very, very, very closely because of what the CBN has done over the last 15 years through the Development Finance Department, just to get as much of the learnings and the data and the records so that we can build on some of the successes that were recorded, particularly around the Anchor Borrower Program. There are quite a lot of aggregator, processor-led institutions have built a strong network of smallholder farmers across this country. So we are trying to work with all these partners to make sure that we build on the successes recorded. Thank you.
Thank you so much. A lot has been said, and I know that we have our questions. We'll be getting to the questions shortly. And again, like I said earlier, the links are being shared on the chat section. You can take advantage of some of, want us to reach out to you and explain what's available. If you still have questions after the session, we will address them with you. The perspective you've given in terms of collaboration, and I love what you said about lessons learned from the Anchor Borrower Program and using that data to further develop and create solutions that will enable agribusinesses to excel. Thank you so much for that perspective, Mr. Imam. So I'm going to be going over to Femi in terms of what regulatory reforms you think would effectively unlock greater private sector capital. And I also like you to give a practical financing case using the Anchor aggregator farmer financing model. And so we can understand how the financing structures works across this breakdown. Mr. Femi, you have the floor.
Thank you very much, Ruth. I think this is the point where, in an attempt to speak the truth to your regulator, you need to be very careful so that you don't get your license withdrawn. But the truth is, the Nigerian economic problem, the Nigerian agricultural economy problem is big enough for all of us to share. It's significant enough that if every stakeholder takes a piece of that problem and we work together, forging in the same direction, we will solve these problems. If the public sector organizations do their work, the private sector organizations, the banks, the FMCGs, everybody has got a role to play. And everybody is doing their own thing in their own space, and it's as if everyone is working in silo. Imagine if there is a strong community of agribusiness players, whether you are on the regulation side, or you are on the farmer side, or you are on the aggregator side. Imagine all of us as a big community with one voice. We will change some of the, we will challenge some of the problems we are facing. Problems like adulterated seed, adulterated fertilizer, right? Problem like flooding and all of that. But because the little bit that each of us is doing in our different location is not coming together to create the necessary impact that we need to create. And that is why, as a bank, we are looking at a very strong community. And we have developed what we call Agri-Hub. Agri-Hub. See it as the X or Twitter of agribusiness economy, where every player, no matter where you are, whether you are in the animal husbandry or the crop husbandry, or you are a regulator, or you are just an aggregator, whatever role you play in this community, there is a platform where every one of us is interacting. So we are reducing, it's like bringing our little successes and impacts together to create a massive impact, a massive movement that can change the narrative. And that's what we need to do, because everyone is doing their bit, but we need to amplify our individual efforts into a community. And that's why we are bringing up what we call the Agri-Hub. It's the X or Twitter of the agri-system, agribusiness ecosystem. And we need the support of the regulator to approve some of these initiatives, all right? And this is us appealing to all regulators. I don't want to mention names, but some of these great initiatives are pending the approval of our, regulators. And these are initiatives that will solve our major headache. For example, you're a small rice producer, you produce paddy on 5 hectares in somewhere in Angugi, in Kebbi. Nobody sees you, but that little venture is what is creating value for your, first for your family and then for your community. Now, while you are harvest your paddy, you have an issue. How do you move your small bags, say 20 bags of paddy, from your small village to the center market, to the marketplace that takes about, say, 50 kilometers on a road that is not motorable? So if you look at the cost of moving your paddy to the main market to get the best price, you are at a loss. But is there a community of other smaller paddy producers in that community where you aggregate all of your bags together? And that's where the role of an aggregator comes in. Provides a single logistic for all of the smallholder farmers, so that the cost of logistics become reduced because of economies of scale. So essentially, that is the kind of community we are trying to build, so that we have a strong community that can make all of our efforts work. Now, a practical case study of what works when we talk about the farmer, aggregator, and anchor model. There is a chain linking these 3 key players: the farmer, the aggregator in the middle, who is the bridge that links the farmer to the anchor or the processor. Most times, there is failure. When there is failure on the bridge, when the link between the farmer and the anchor is compromised, then there are losses of credit, losses of input, loss of time. And that's why we employ what we call a value chain perspective. You don't plant a grain of seed without first of all framing up who is off-taking. Having identified who is off-taking, what is the capacity of the potential off-taker? Are there alternative off-taker in the event the economic factors has reduced the capacity of the priority off-taker? So these are the models that we are putting together. And I would like to give an example of the maize value chain around the activity of one of our major commercial producers of grain in Nigeria. Permit me to mention a name because they are our partner in Agri Summit Africa. Now, this anchor company aggregates smallholder farmers in their hundreds of thousands. And you'll be surprised that loans in kind are being given to these smallholder farmers of maize at commercial interest rates, not at 9%, not at 15%. These farmers are able to make profit even at 25, 30%. I am not speaking gibberish. I'm not telling a story. I'm telling you what is working. That agribusiness is profitable with the right model, with the right partners. Sincerity of purpose. These farmers get seed, fertilizer, agrochemicals at the beginning of the season. They get technical support on how to plant. They get technical support on when to weed, when to harvest, how to aggregate, and all of that. And at the end of the day, when they deliver their commodities to the market, in fact, before they deliver their commodity to the aggregator or to the anchor, they are paid what they call harvest advance. That we know that you have got family to fend for. Before your maize is ready for purchase, we can give you 20%, 30% of your expected income because you have to go back to the farm. You have to prepare for the next season. You have to pay for your children's school fees. You have to pay for healthcare. And these are the incentives we are bringing in so that it is not just a paper, an agreement on paper. Oh, I will plant, I will sell to you. But you don't care what happens between planting and selling. And so we have a model that cares about every part of a farmer's livelihood. And that's the model we are preaching to say, let the farmers who do the hard work, let them feel a part of the whole system. And then you will see that Nigerian farmers are trustworthy. They don't have the need to side sell if the economic factors make sense to everybody that's a part of the ecosystem. So that is the case study that I'm bringing on board, a model where you have the farmers, the aggregators, and the anchor or processors in one ecosystem, and everybody is true to their commitment because there are incentives, all right, that are fair across board. And the incentive to side sell and to divert fund is no longer on the table. Thank you very much, Madam Moderator.
Thank you so much for that rich submission. Right now, we're coming to one of the most important sessions, and that is question and answer. We have over 84 questions, and we're just going to take it over 84. I know we've answered about 36 but right now we have about 84. So we cannot answer everybody's question. So let's establish that. However, I'm just going to pick one, or I'll pick some that we can answer. What we can do is, again, we have links that have been shared in the chat section for you to be able to reach out to us and benefit from some of all of the offerings that have been shared today. So the first question is revenue generating startups and loan eligibility. For an agribusiness MSME that is operational with traceable revenue, but still in the early growth stage, How do your institutions define the minimum threshold for loan eligibility? Is there a formal classification that separates pre-revenue startups from early stage but revenue generating businesses in your assessment criteria? I believe, Femi, you can take a go at this answer.
Thank you very
At this
much,
question,
Madam
rather.
Moderator.
Yes.
Yeah, thank you so much. For startups, we believe that a good startup is one who has successfully done a proof of concept. And what we encourage startups to do is that engage us at the point you are nursing that idea. Our approach as a bank is different because we don't give you a list of conditions or terms and begin to tick that condition one, has this business been existing for more than 6 months? Tick. If it is yes, no. If it is not, yes. So what we do with our checklist is to see your state of health and see what medication or what dose of medication work for you. So it's just like a patient approaching his doctor and you are doctoring your health record, you are doctoring your information, and you want your doctor to help you. You are lying about your revenue generating capacity. All right, you are lying about your relationship with your off-takers, your relationship with your input suppliers. So that is what we have found out with most MSMEs. When they see a product or a proposition, they look at the terms and conditions and they begin to write a 50-page feasibility report just to fit him. Whereas the feasibility report does not reflect their reality. So what we advise MSMEs to do is to come as you are. We are not going to, turn you back. Of course, we have criteria as to what must be in place for us to let you into the door. But our engagement with you, even if you are not ready at that point to come into the program, our job as a bank is to make you bankable, is to work with what you have and put the right structure around what you are doing. So if you have if you are generating income that is not adequate, for example, basically what we say is for any loan amount you want to get, you must be doing close to 200% of that in revenue. If your revenue is not up to 200% of the loan you are asking for, we don't advise that you even take a loan. So what we do for you is to, how do you help? Let's do a diagnostics of where you are. Do you have the capacity to generate more revenue? Why are you generating this kind of revenue? I'll give a very practical example. There was an egg producing commercial poultry farm that we engaged. We realized that with the stock of layers that they have, the population of laying birds that they have, they should be turning in more eggs. They should be doing in more revenue. It meant that the laying efficiency of these laying birds were below standard. And we found out and we asked, why? You have this number of birds, they should be laying this much. And the farmer said there was a problem that when they are picking the eggs, a lot of them get broken and they are sold off as rejects. And we investigated, realized that the feed was lacking enough calcium. And so we intervened and we fixed the feed problem. From the feed problem, they were now able to generate, to lay more eggs that are, strong enough for the logistics from the farm to the market. So at that point, that customer did not need additional loan to expand. They just needed to do more under the capacity that they have. So if you are a startup, you have started to generate revenue or you are looking at starting to generate a revenue, we have a system in place to engage you, to sit you down. We'll trust what we inquire from you, what we require from you is for you to be open and be transparent. If you are operating on 5 hectares, say it's 5 hectares. If you have capacity of 10,000 beds, let it be clear. If you have 100 animals or 3 animals, be clear. If you have not sold your first product before, let us know. It's not a problem. We are not going to say no to you. We are just going to say, this is not the right time. This is how to go about, and we'll guide you all through the process. During our, okay, I think the time is running up. So there are a lot of engagement we can do. Just approach us. We will guide you on how to be bankable. The first thing that you need might not be funding. It might be market access. It might be technical support to enhance your current capacity. We are there for you, and that's our approach. We don't say no to startup. We just guide you on how to start up.
Beautiful thoughts and perspective, and the guidance, like you said, sometimes it's not even time for capital, but the right systems and structure to enable that even when the funding comes, you can scale and get your required yields. And another question is, can livestock, dairy farming, and sustainable energy, agribusiness, access funding? I know the answer is yes, but I will let Mary Esther speak on LPRES on this, which we're doing in partnership with financial institutions like ourselves, Sterling Bank. Mary Esther, you have the floor.
Yes, I think that's the short answer. The answer is yes, but because I know that there'll be questions recurring on this, so I'll just generally say this so that I think it will answer so many other questions. For us at DBN, the model is to partner with financial intermediaries. So if you're an MSME in the agri sector and you require funding or any other financial advisory in addition to funding, the first point of call is not Development Bank of Nigeria because of the model. The first point of call is your bank. So in this case, Sterling Bank, Mr. Femi has clearly articulated the channels. Sterling Bank is saying, if you need to discuss your funding need, come to us. We have the plethora, we have a couple of partnership across that we can leverage. So yes, you can access fund. Your mark on in the middle of the value chain for LPRES. So you are eligible by way of the business that you're doing. But in terms of the credit assessment, the needs assessment, the facility structure and all of that, it will be done by the bank, essentially, because DBN is only providing the liquidity. So it's important that your bank knows you very well so that they can understand what you need. So I'm just saying this because I know there'll be other questions as to how do I access DBN, whatever. So the answer is that it will be through the PFIs. In this case, we have a partnership with Sterling Bank across many business sectors. So you can easily engage them as they are one of the solid partners that we have. So that's the short answer.
Thank you so much for that. So yes, you can access funding, register your interest on the links that are being shared. I love some of the feedback I'm seeing. The statements, Mr. Femi's statements are very, very encouraging. Yes. So let's move over to the next question. Mechanization as a service, financing agricultural mechanization businesses operate on seasonal revenue model with income concentrated around planting and harvest windows. Do your institutions have loan products specifically designed around this cash flow structure? And how do you handle collateral requirements for equipment-backed agribusinesses? Mr. Femi, I would like your thoughts on it, and we can also have Mr. Imam's thoughts on this after you go. Thank you.
Thank you very much, Madam Moderator. Of course, we finance all aspects of agricultural value chain, either pre-production, where we have mechanization service provision. We know that if you are going to scale food production in Nigeria, tractorization and mechanization is very, very important. And we have a full-fledged product program signed up to the board level to engage equipment leasing, tractor hiring, players in the space. I will encourage you to please try and join the Agri-Hub, where you have access to our product propositions, and we also provide you details, on the key terms and conditions and how we can guide you because of our time. Also on the chat room, I know some of my colleagues are there. Kindly please drop your email address. We will reach out to you on the specifics on how to take advantage of our agri tractorization financing product. The pricing are very competitive. We have a lot of partners in that space, a lot of them. We are happy to welcome you to be part of the family. Thank you.
Okay, so I have said Mr. Imam will come in now. Thank you, Mr. Femi, for that. There's also another question towards NADF, so we'll just take it together. And the question is, most agricultural intervention programs funded by the FG are often very difficult to follow up or obtain data, such as the beneficiaries, the amount produced they got, digital platform to monitor the sustainability and outcome of the project. What effort is NADFund putting in place to ensure that this problem is solved? And I also love to state that the School of Politics policy, we are building a solution to solve the problem, and we'll be elated to work with NADFund. I know that Mr. Iman has spoken a lot about statistics and data and how they're working with researchers, the CBN. So, Mr. Imam, you have the floor.
Thank you very much, Ruth. Okay, like Mrs. Mary Esther mentioned, most of our on-lending, the due diligence, the customer beneficiary assessment is done at the PFI level, who manages and assesses the risk. NADF does the financing. So under the NADP or the NADF blended finance, like I stated earlier, we have 16 financial institutions, Sterling being one of them. Any interested party would approach any of those 16 banks to apply for on-lending programs. Well, in terms of, on the second question, in terms of ensuring monitoring the implementation of government programs and interventions, I think one of our major mandates in NADF, in the Act itself, if I may say, is to develop like a national farmer database, and this calls upon us to work with every stakeholder that has been active in the space, particularly the CBN, which has been nurturing the agricultural space through its development finance activities over the last 20 years. So the NADF is working with some technical partners, along with the National Collateral Registry, the Development Finance Advisory Department of CBN, to come up with a robust farmer database, and to also, like I mentioned earlier, to make sure that as a country, we don't throw the baby with the bathwater. All the learnings, good and bad, from previous programs, they are the same actors, it's the same space. So whenever like programs are initiated and for some one reason or the other, there are changes in government policy, we should not, just, break whatever has been done from the past and try to reinvent the wheel. So at NADF, we are engaging all relevant stakeholders to collect as much relevant data from previous programs to build a robust farmer database for the agricultural sector. This will make smallholder farmers more bankable. There are a lot of development partners that fund and support smallholder farmers with either inputs in kind, funding, technical assistance, as grant. But the data with which they would work is becomes very difficult. So we are working closely even with the National Bureau of Statistics so that our national data on agricultural production, the number of farmers, how the farmers are disaggregated across association, crops, segments of the value chain. Like we collect this data and it becomes the basis for implementation and conceptualizing of future interventions. So at NADF, we are not trying to reinvent the wheel, but we are open to working with every stakeholder, the commercial banks, other sister development finance institutions, the BOI, the NISAL PLC, NISAL Microfinance Bank, and the CBN to make sure that we build on the past successes and we learn from past mistakes, and that we avoid a repetition of mistakes that have been done in the past. So I'm sure in the next, by next year, the NADF's work on the farmer database will be launched nationwide, and it will be open to use by financial institutions, by development partners, by sister government agencies that would require data for any use that they may have. So in terms of what is being done so far, the NADF, like I mentioned earlier, has embarked on the training of about 2,000 digital extension specialists across the country. And this digital extension workers will be supported, and we will try to tie them into any funding that we do in the location that they are in, so that they continue to collect data, and the kind of technology that they are equipped, that they will be equipped with, will allow them to also do things like farm mapping, and all this data is being collected so that we get records. Which, back to the first question that was asked during this summit, information asymmetry. Once these data are collected and kept in a really organized way, I think it becomes treasure for financial institutions, and it opens up the space, particularly for agencies like NADF, which our role is to catalyze private sector commercial lending by taking the first loss or reducing the risk of any commercial lending to the agri space. Thank you.
Thank you so much for that. And I know that we still have a lot of questions and inquiries. Again, you can reach us at info@agricsummit.org, and we will be available to answer your questions. Also, please, the links that have been shared, you can fill it up. You could click on those links and register your interest. Remember, Agriculture Summit Africa physical event is happening September 15th to 16th at Transcorp Hilton in Abuja this year. And the link has also been shared for you to register if you would like to partner. I'm seeing a lot of conversations around partnership. If you want to exhibit, it's also an opportunity for you to do so. So by filling the links and reaching out to us at info@agricsummit.org, we'll be able to take the conversation further. I saw a question around regional farmer engagement. It's one of the things we're also working with our partners to do. And again, if you're interested or you want us to partner, we can also look at the possibilities even within your locality. Thank you so much, everyone, for listening. Thank you to our panelists for such a rich time and all the expert information shared and insight provided. I believe that it has been a rich session. You can have access to the replay on our YouTube channel. It would also be sent to you because you registered for this webinar. Femi is going to be taking the closing remarks even as we round off on this seminar. Remember, on this webinar. Remember, the links have been shared and they're being shared again by the admin. We want to work with you, want to partner with you to ensure that the agribusiness space will obtain food sovereignty within the next 5 to 10 years. Thank you so much. Mr. Femi, you have the floor.
Thank you very much to all our participants. Thank you, Madam Moderator. Thank you, our esteemed panelists from the Development Bank of Nigeria and NADF. We are so, so grateful that we are doing this together. As we conclude today's webinar, on behalf of the board and management team of the Sterling Bank Limited, we sincerely thank our distinguished speakers, the panelists, the organizers, and all participants for the insightful contributions and engaging discussions. Today's conversation has reinforced an important reality. The future of Nigeria's agricultural sector depends not only on the availability of capital, but also on our collective ability to build resilient, investment-ready agro MSMEs that can attract and efficiently deploy that capital. At Sterling Bank, we are not your regular commercial bank because our profit is in the impacts that we make in the lives of every Nigerian and every African. And that is why our purpose is enriching lives. So our real balance sheet, our real income statement is in the lives of ordinary Nigerians. So at Sterling Bank, we remain committed to supporting the growth and transformation of the agricultural value chain through innovation, financing solutions, through strategic partnerships with DBN, with BOI, with BOA, with NADF, and all stakeholders, through capacity building and sustainable interventions that create lasting impact. We thank you all for being a part of these engagements. I'd like to leave you with a message from my Managing Director, Abubakar Suleiman. When a participant at the first edition of the Agri Summit Africa stood up and asked him, Mr. MD, why are you inviting competition to your event? Why are other banks available in a Sterling Bank event? My MD said, and I quote, the Nigerian food problem, the Nigerian economic problem is big enough for all of us to share. So collaboration is the new competition. Thank you. God bless you. God bless the Federal Republic of Nigeria. Thank you, Madam Moderator.
Thank you so much. I love that quote on the collaboration. Nigeria's problem solutions lies in collaboration. Thank you so much. Again, the links are going to be available. We're not exiting now, so you can still access the links. Remember, the Q3, we're going to be having a physical event at Transcorp Hilton, September 15th and 16th. We were going to be having policymakers, DFIs, financial institutions, agribusiness, value chain players, all gathered together to talk about how we can move the needle forward. We're building a resilient agricultural space. Hallelujah. Thank you so much, and do have a wonderful day. We'll just remain a little bit on the chat to ensure that everybody can access the link. Do have a wonderful day. Thank you.
Thank you very much.
Thank you very much.
Have a wonderful day.